Hello and welcome to Crux Investor. We caught up today with Mark Brennan, who's the CEO of Cerrado Gold. They are a gold producer with assets in Argentina and Brazil. If you want our thoughts on that conversation and what we talked about with regards to their business plan, of course, the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports. You can find commentary from market experts from around the world on a variety of commodities and companies. There are training videos on there, summaries of other interviews that we've done just to save you a bit of time, and of course, a community of investors sharing their thoughts and ideas with each other. So do go along there now and join them at cruxinvestor.com/club. We'd also love your feedback too. So do give us a like, leave your comments below. If you want to see what we talked about today, take a look in the description. Mark, how are you doing, sir?
I'm very well. Thank you very much.
Well, thanks for joining us. You are going to tell us a brand spanking news story because you're private at the moment. You're going to list next month. So I'm looking forward to this one. But first of all, where are you in the world?
Well, we're a private company based in Toronto, but we have two main assets in Brazil and Argentina. And we're focused on gold. And our objective is to, in the next 3 or 4 years, to move from a 50,000 ounce producer to a 200 plus thousand ounce producer. Using the two assets that we have currently. We're private right now, but our intention, as you mentioned, is to go public by mid next month.
Fantastic. Okay, thanks for the run through. You better introduce yourself and tell people what you've done in the past so we get a sense of who we're dealing with.
Okay, well, my name is Mark Brennan. I have a long history of starting up companies. I was formerly the president and CEO of a company called Sierra Metals. I went in to restructure that asset. I took that from 200 million to 600 million in a couple of years between 2015 and 2017, prior to starting Cerrado. Before that, I started Largo Resources. I was the founder and started a greenfield project with a hole in the ground. We raised $350 million and we brought this to production on time, on budget, which is now the highest grade, lowest cost vanadium producer in the world. And prior to that, I was part of the founding team at Desert Sun. We had the Jacobina project that we started in 2002, and we sold it to Yamana in 2006 for $700 million. So we're back to gold, and the team is back to gold. We've been working with the team for the last 15, 20 years. We're builders. That's our focus, and we've been very successful in accomplishing our goals as a past.
Okay. So thanks very much for the summary, first of all. So you got track record in South America. I feel very comfortable there. And the team that you put around you, I mean, have they worked with you in the past?
We have. I mean, I started working with Kurt Mencken, who's our chief operating officer, first of all with Desert Sun, which we had the Jacobina project we sold to Yamana. Then we started Largo in 2005. Largo, most of the team, a lot of the technical team and the other team worked with me at Largo. And they joined me subsequent to starting up Cerrado. And so we have a very strong working knowledge of each other, and we've worked very closely together for the past 15 years.
Okay. We've actually interviewed some of your companies. You're glad to hear. They're doing quite well, in case you were worried.
They're doing okay.
They're doing okay. Okay. Well, look, we better get into the projects proper, because I'm intrigued as to how you're piecing it together. Because this is obviously, pre-go public. You've put a bit of money into this, and so how much money's been sunk into this so far, actually?
Well, in terms of the existing the current management, Cerrado Gold has put in about $15 million to date. There was a previous historical workings on the property of about $20 million prior to our getting involved. But they weren't looking at the same strategy. We had RGZ in the late 80s, et cetera. But focusing on in particular in Brazil right now, we put in about $15 million to the new plan. In terms of the Argentina was an asset that has had probably about $220 million put into it prior to our arrival. And we were able to buy that very, very opportunistically. So we have two what we consider to be world-class assets with very strong growth potential.
Got it. So just clear up the detail for me. So you said 15 minutes gone. 15 million from the management team, or you've raised that and put that in? How much of your money?
Well, in terms of the management and directors have probably put in, I'm going to guess around $3 million, $4 million bucks at this point.
Okay, fine. And then you didn't give me a number on the Argentinian asset. How much money's have you paid for that, or it's been spent on it by you guys?
Basically, well, we bought that asset for $45 million, of which 15 million was up front. 10 million will come after 2 years, 10 million after another 2 years, and then 10 million after another year. So we paid $30 million over a 5-year period.
Okay, so let's start with Argentina first. Tell us what you think you've got there, because it seems to me that is going to be used to create cash with not only to expand itself, but also do a little bit of work up in the Brazilian asset. So tell us what the plan is there.
Sure. We started negotiating Argentina in May of 2019, closed it in March of this year. And the objective there is that what we see is about an 8 or 9 year mine life where that project will throw off $25 million of free cash at $1,650 gold. So that was the initial premise of our investment in that asset. However, what we've seen since we've acquired it is we see some other opportunities. So what our expectation is that the cash that's generated out of Argentina for the next couple of years will be utilized in Argentina. And then the funding that we're raising now as part of our go public transaction will actually be used exclusively for Brazil. But what we're looking at with Argentina is probably a very, very strong base case of about 50,000 ounces per year and generating 25 million. And our hope is that by the exit of next year, we should be closer to 70 to 80,000 ounces. And I think long term, it's probably looking to me like a somewhere 80 to 100,000 ounce producer moving forward. So good, very positive. But where we see the really strong growth is coming out of Brazil.
Okay, which is why I want to start with Argentina, just get a measure of that. But today, some pretty ambitious numbers you're going for there. Today's numbers would suggest that you've got quite a bit of work to do. So tell us what you've got today and what you think you have to do.
I'd say that, the in terms of what we're looking at is that right now Argentina is being severely constrained by COVID. And so if you look at Yamana, if you look at Yamana are next door to us in Argentina, if you look at Newmont, their production in Q2 was down 73% quarter over quarter with 2019. And the reason for that is large part is COVID. So yes, we have we came into this asset and we acquired this asset in March when COVID struck. So really, we haven't really had the opportunity to operate this mine until August of this year. We've been operating at a 50% capacity in terms of our workforce. So we've had some constraints, but at the same point, when I quote to you the 50,000 ounce target, those are what I believe to be COVID orientated numbers. Unless COVID comes in and shuts down everything, then I think that with the case that we've been operating with, we see a comfort zone of operating in that 50,000 ounce kind of environment. And how we're going to do that is that when we acquired this asset, we saw 550,000 ounces of global resource. So about 200,000 ounces of measured indicated, and then 350,000 ounces of inferred resource. And the inferred resource we think will bring into the measured indicated as we move forward, which gives us that 8 or 9 years of 50,000 ounces. The plant, they put a brand new plant in. It's got 1,000 ton per day, brand new CIL Urucumpu plant, state of the art. I mean, the infrastructure and everything they built there was first quality. So that's been very good. Where we see the great opportunity is improving the mining, where we can actually feed the mine at the grade of the deposit. And so the previous owners were diluting the heck out of this project. And so what we're doing now is we've been increasing, at the plant, we've increased recoveries from 88% to 92%. If I look at the resource, the average resource grade is about 5.25%. So a very high grade for an open pit operation. And now what we need to do is we need to feed that plant at that 5 gram total. And what the previous owners were doing is they were feeding that plant at closer to 2 grams. So since we've owned the mine, we're now feeding that mine at around 3 grams. We should exit the year around 3.5 to 4. And then what we expect is that the next year we'll exit next year feeding it at 5 grams. And that'll get us up to that 50,000 ounces, I think pretty comfortably.
So, but you're also indicating an AISC around, $1,000 somewhere. Well, I think you're talking here somewhere between 900 and 1,100. Let's say $1,000 on average. I mean, you're going to need to be operating at full capacity to hit that, aren't you?
Our right now our AISC is probably approaching 1150. So from that perspective, we're not talking a huge move, particularly as one is that we've been operating at 40% capacity. So as we move to greater capacity with the culmination of COVID, if as and when that occurs, that'll get better. But also feeding higher grade material into the plant will reduce those costs fairly significantly. So I think $1,000 all in, should be a pretty achievable number.
Okay, so you're quite close to making money. So you think in terms of when do you get into some kind of free cash flow position there? Because you've got the plant, you've got the infrastructure. It's just operating costs from now on, isn't it?
It is, and basically the biggest issue we've had is kind of since August. The biggest issue we had is with the fleet, and so we've had some issues with maintenance, and then bringing in parts and bringing in people on the maintenance side is being our biggest challenge. For example, we have eight trucks of our own, which basically we use for the mining operations, for the waste operations, and basically 4 of those have been off since August because we couldn't get replacement parts and things like that. We've brought in another 4 trucks, of which 1 will be available at all times. So now we're up and running at 11 trucks, and so we're getting on to greater capacity. And so what we've done is we've over contemplated our production so that we have excess capacity, as opposed to when we first acquired the mine, we were under capacity. And so now we're operating at an overcapacity where in the best case scenario, we have a truck or 2 sitting around. Well, that's a much better scenario for us than not being in production.
Right.
So nothing is more expensive for us than not producing and not generating ounces.
Right. So how much cash are you sitting on today in terms of the total group?
About $9 million.
Right. Okay.
US.
And how much of that needs to be thrown at the Argentinian asset?
Well, I mean, basically, Argentina is pretty much self-sustainable. That's actually been on an Argentina operation. It's been pretty flat. We've had some pros and cons during the period of this COVID, but generally it's running pretty flat. And actually, I think we'll exit the year north of 3,000 ounces, which gives you a run rate of 36,000 ounces. So getting to that 50,000 ounces is not going to be an excessive. It's not going to be an excessive amount in my view.
Right. So you're going to be able to move the inferred component into measured and indicated. You're also going to have to do a bit more exploration, I suspect, too. I mean, have you got targets? How much data did you inherit when you bought this thing?
Yeah, I mean, what's remarkable is that, the previous owners have done no exploration in 5 years. And the fact of the matter is that, I should just mention that we did announce an acquisition of a company called Minera Mariana. So we have actually brought our resources up by an additional 420,000 ounces, of which 380,000 ounces are indicated and 40,000 ounces are inferred. So all those ounces will go through our production facility. So really, on a global basis, we're just shy of 1 million ounces currently, of which 600,000 of those are in the indicated category, 400,000, 375,000 are in the inferred category. So I see that as we move forward, we will substantially increase our resources. Now, one of the great opportunities that we've found since we've gone in March has been that there are 12 satellite deposits where there's been varying degrees of work, anywhere from 2,000 meters, 4,000, 6,000, 7,000, 17,000 meters, 12,000 meters, where they haven't compiled resources. And so we have a very aggressive exploration program starting in January. And basically what our expectation will be is that we can bring in a lot of those 12 resources into our resource categorization, into a 43-101 compliant resource that we can speak to. And I'm hoping to bring that in by the end of the summer. And I think that we'd be very unfortunate if we can't add another 500,000 ounces.
Okay, so you've got targets there. You're saying it's self-sustaining, but you're planning any money you make back into the ground for the exploration program to kind of build this thing out. So where's the value for anyone buying into this?
Well, as you know, when you go in and acquire something, you look at what you acquire and you look at the potential of the machine. And basically, as I mentioned to you, we see great potential here. I think that as opposed to running a 50,000 per year operation, we can probably get closer to 100,000 ounces. And basically what I would say is that 50,000 of those will be a base case. We're looking right now, and part of the Mariana acquisition, was to look at a heap leach operation. Now at Mariana, there are 200,000 ounces that we see at Las Calandrias that basically can go directly into a heap leach operation. Now, the acquisition of Minera Mariana wasn't going out and acquiring a project 10 miles from us. It was actually acquiring a project that was on our border. And actually it splits a deposit that we have called Escondida. Now, Escondidas have about 11,000 meters of drilling. So we see being able to upgrade the resource that we have there and bring it into a compliant 43101 very quickly, that we can add to La Calandrias. So my expectation is that by the end of next year, we will probably have a heap leach operation of 20 to 30,000 ounces, in addition to the base case of 50,000 ounces. And again, if we look at the 50,000 ounce base case, our target at $1,650 gold is about 25 million of free cash. If we add the exiting next year, 20,000 ounces at $1,650 gold, that should get us to somewhere in the region of about 15 million of free cash. So next year we could be exiting somewhere in the region of 40 million of free cash. So that would mean in 22 we're generating that kind of cash. On the assumption that we haven't, but we'll have to invest some money to do that. We'll have to look at where we will be, as you mentioned, investing into exploration. Our expectation is that we will not take cash out of Argentina probably until we start construction in Brazil, which will be in 2022, 23.
Okay, so those are lots of hopes for what could happen next year, and I think saying it and doing it, two different things. So what are the exploration risks for you? I mean, you talk about 12 potential targets, but doing business in country, I get the infrastructure's there. There's a mine there. You got a plant there. It all sounds fantastic, but someone sold it to you. So what was the problem?
Well, it's not. It hasn't. Every mine has its challenges. The mining sector is immensely complex, as you're well aware. But in terms of the what we see here is that the sellers, to your point, were a consortium of 18 electronic component assemblers, and in 2014 they were told that by the government that they needed to buy or to get into an industry that actually imported U.S. dollars. Their business was comprised of selling equipment that basically they'd pay for the components in U.S. dollars abroad, and then they'd sell in pesos in Argentina. So what happened is that the government recommended to them very strongly that they should get into an industry. Now, they could have got involved in agriculture, they could have gotten involved in mining, oil and gas. They happened to get involved in mining. They knew nothing about mining. The reality is that they spent $220 million, $100 million in buying the asset, and $120 million going into the asset. So as I say, we have a first-class infrastructure in place, but they didn't have people competent to run the mines. They didn't have a general manager 18 months prior to our acquisition. They were fed up. They'd had enough of it. And frankly, when we started negotiating with them, gold was at $1,200 in May of 2019. So they were just fed up. They wanted out, and we were good candidates for them to come in and acquire.
Wow, you got lucky. Nice.
If gold could be $1,200 right now, right? And if it were, we would have still made the acquisition because we saw the capability to potentially bring the resources down lower. But I'd say to you that So it needs to be fixed, and the biggest component, which is fantastic, is that it's mining process related. So for example, we designed our own pit shells. We brought in new mine sequencing. We reduced the bench heights from 5 meters to 2.5 meters. We mined from multi-level benches as opposed to one level. We reduced the polygons from 5 to 7 meters down to 3 meters. And these are all mining processes that you would find most sophisticated mines. But it wasn't happening here. And so it's just a tremendous opportunity. Now, this takes time, and you got to change the culture of the people working there. But at the same point, these guys are eager, they're ambitious. But the most promising thing here is that these are not high, big ticket items. These can be done for very little cost. It's really more process as opposed to cost. The biggest cost that we have, and I don't know, you'll probably shake your head at this, but the reality is that they were doing little to no sampling in advance of mining. And I don't know many operations anywhere in the world where you do no blasting and then sampling, and then you mine what you sample, and you sample, the waste goes to the right and the ore goes to the left. In particularly in Martinetas, you couldn't tell what was barren and what was ore containing. So it was a very difficult exercise. So we've taken over a lab that was run by an independent group, and we're going to be running that ourselves starting in December. We'll be doing 150 samples a day, getting those samples back 12 hours, 24 hours later, where right now they take 20 samples a day and they get those back 48 hours later. So they've already mined when they get the samples back. That's probably one of the most shocking or surprising elements of their mining operation, because that's something you would never see anywhere in any modern type of mining process.
Yeah, like I say, I think it sounds like you got lucky there identifying something like this, because if it's just a question of just changing processes, you can deal with that. If there's something more fundamentally wrong with it, then obviously, there you go. But doing business in Argentina, though, people struggle with that.
You know what? It's interesting. We have been, we've been a little unfortunate with respect to COVID, and Argentina has been severely hit by COVID, and they've been extremely diligent and extremely restrictive in terms of operations with respect to COVID. However, we still see a very strong opportunity even with COVID. And as I mentioned to you, we've improved our recoveries. We've improved our the resources only gotten bigger, and the grade, we've confirmed the average grade of 5.25 grams. So now the real issue is, okay, feed the grade to the mill. What we've had to do for a large extent previously was feeding stockpiles that were low-grade stockpiles, that are existing low-grade stockpiles. Now, our low-grade stockpiles are running 1.4, 1.6 grams. Many mines would love to have a 1.4, 1.6 low-grade stockpile. But what we need to be feeding is 5 grams, and that's where we're going right now. So it's not really, we don't need a substantially more capacity than we have now. We don't really need a lot of things to change under COVID. We feel, even under the restrictions that we've had right now, that our goal of 50,000 ounces of a base case is very attainable.
It is. You're talking about the process. I'm talking about the country. You mentioned something exchange rate. Whichever state each state has a different attitude to mining, licensing, and permits. So, what's it like where you are?
Yeah, now we're in Santa Cruz, and Santa Cruz is Kirchner territory, and Alicia Kirchner is our governor, and she's the sister of the previous president, and so I'll say that our next door neighbors are Yamana, Anglo with Cerro Vanguardia. We have Newmont. These are mines that are producing 250,000 ounces, 350,000 ounces for the last 20 years, 30 years, and so the reality is that mining has been left alone, and it's a big land position. The state is very big in terms of its land mass, with a very small population, probably less than 200,000 people or 200,000 people or so. So you can operate very comfortably without running into people, which is very good for mining. However, it's really more a problem on the macro basis, with the federal government and things like cost, like bring in the exchange controls, export taxes and duties, and those are challenging. I won't make any. Argentina is a challenging environment to be working, but at the same point, we see a very strong opportunity, particularly in light of the fact that we are not looking to export dollars in the next 24 months. If we are looking, as I mentioned to you previously, on an operating basis, we would like to exit next year at a $40 million run rate on a free cash basis. Well, in the worst case scenario, we can probably look at exporting of that 40 million. We could probably take out $25 to $30 million. The reality is that that's not bad for even if it's $15 million. That would do a lot to sustain Brazil, which is really where we consider our crown to be. So in terms of the when we the exchange controls were only brought in place in September of 19, there's going to be a challenge. Inflation's running at 45%. The actual currency itself is probably the official rate's running around 85 pesos to the dollar. The blue market is running at 140 to the dollar. So they're just the central government is now renegotiating. They just finished renegotiating some foreign currency debt with what's called the BlackRock Group. Now they're renegotiating with the World Bank. They've got some challenges, without a doubt. The big issue with Argentina, you're talking about external debt of $450 million, $450 billion. That's not a big number. If I look at Canada, I mean, it's a very small number. The problem is that they don't have the capacity to generate dollars. So their foreign reserves are very, very low. And that's the biggest issue that Argentina has had historically, and that's the biggest challenge they have today. And how are they going to fix that? I don't know, very candidly. I do expect in the next couple of years that exchange controls will go away. I know that Fernando, the new president, is using mining as what he considers to be a strong gateway for growth and the importation of dollars and trying to solve that issue of exporting dollars. We're in a district called the Cerrado Massif, and it's a huge basin, and it looks very similar to, it's an classic epithermal system, which looks identical to Nevada. But here we are, we're a small company. We own 340,000 hectares after our acquisition of Mariana. 340,000 hectares, like that's huge, like that's astronomical. And the reality is that, probably the exploration that's been done on this belt is probably 1/50th to 1/80th of what's happened in Nevada. And we're starting to see more companies coming in. You're seeing groups that know Argentina are coming in from other states. They're coming to Santa Cruz. And I think you're going to see a lot more exploration, a lot more development of the mining sector in Santa Cruz. There's probably other places in Argentina. But to your point, I mean, it's a challenging environment. And there's an old axiom: you either buy a good mine in a bad jurisdiction or you buy a bad mine in a good jurisdiction. That's where the opportunities lay. And so I look at companies like SSR, Equinox. Many companies have built their, Yamana, they've built themselves on Argentina, and they've looked to grow elsewhere. And so where we are now, what's interesting, I mentioned earlier, Yamana and Anglo and Newmont, these guys all started as open pit mines, and then they went underground. And so right now we're focusing still on open, the open pit mining. So the fact of the matter is we haven't even got to the second chapter, and there will be a good second chapter. But I'd say to you that we're viewing this as a long-term investment. We're not looking that we didn't enter here to be a short-term investment, even though it has really greatly assisted us in not diluting our shareholders when we've looked at growing Brazil.
Okay, great. Thanks for your candor. I mean, when people come on the show and say life's fine, it's a bowl of cherries, no problem, we always get a little bit worried. So there are those problems. They're not insurmountable, but you need to know how to navigate your way around it. I also love the fact that there's a regular exchange, a blue market and a black market for currency in Argentina. Fantastic. We should move away from Minera Don Nicolas in Argentina and go up to Brazil, where we've got Monte de Carmo. So what have you got there?
Well, it's interesting. We know Brazil well. I've been involved in 3 different opportunities in Brazil prior to. We were very successful with Jacobina and restarting that old Anglo mine with Kurt Mencken, who's our current COO. We sold that for $700 million to Yamana in 2006. We started Largo, again, another greenfield project, but in vanadium of all commodities. I mean, that was a challenge and a half if you want to know about building greenfield projects in esoteric commodities. That now has a 600 million market cap. And so we know Brazil, and Kurt Mencken built and he grew this opportunity. And with regard to our experience in Brazil, it introduced us to Monte de Carmo. And Monte de Carmo was brought to us by 2 geologists that we've known for 30 years. And basically, these are the 2 geologists who are credited with the discovery of a project called Volta Grande. And Volta Grande is a project that's the only project by a company called Bello Sun that has a 600 million valuation today. That really, it was their discovery. They discovered it. They grew the discovery from 2 million ounces up to 6 million ounces, 7 million ounces where it is today. The problem with that discovery is that it's in the middle of the jungle in Para State, and so there's some significant obstacles in terms of environmental and community issues that they need to overcome. We were introduced to this project, and we started the company Cerrado by this project Monte de Carmo in 2017, when they came to us and said, "Listen, we need help. We think this is a 10 million ounce deposit, but we need help." And so we came in and we did our due diligence. We looked at it and we thought, okay, we see 5 million ounces. Maybe, if we can get to 10, all the better. But we certainly believe internally that we see 5 million ounces. And so what we did is we went in 2017 and we raised some money with some friends and family. We cleaned up the structure. We cleaned up the debt. We got rid of a production facility that was on site. They had a small scale mining operation, which was was very inefficient and not properly structured. And we decided that we were going to focus purely on exploration. In 2018, we went in, we drilled 18,000 meters of drilling. We ended up with 815,000 ounces, 1.85 grams equivalent on an inferred resource. If you think about that, this is a brand new project for us, and yet we were able to come up with every meter we drilled, we came up with over 40 meters per 40 ounces per meter, which is a pretty remarkable recovery. Then in 2019, we started talking to joint venture partners. We initially started talking with a very, very large international mining company based out of Asia. Those talks, we didn't want to give them an interest directly in the property. We wanted them to have an interest in the company, and those talks culminated they terminated in May. In May, we started talking to another very, very well-known Canadian-Brazilian mining entity that we know very well, and they wanted to do a joint venture. But as I mentioned to you, we started negotiating Argentina in May, and the reason we were negotiating Argentina was to give us the ability, directly or indirectly, to raise money for Brazil. And by the time we got to the discussions and the acquisition in March of this year, we decided we wanted Monte de Carmo ourselves, and we wanted to take it ourselves alone. In December of 18, at the end of the time that we did our drill program, where we came up with the 800,000 ounces, we also did an internal scoping study that was done by a third party, and the numbers were very, very strong. And that gave us a lot of confidence that not only do we have a potentially very, very large resource here, in actual fact, we think it's a district. We think that there's a significant district here, and we're drilling that now to confirm that. But what we also thought is that it's high grade for open pit, it's high grade for underground when we get to the underground material. And then what we're looking at is that, but it's highly economic. And so we actually published about 2 weeks ago a PEA, which was probably one of the most robust PEAs that I've ever seen. We were almost, when you hear an embarrassment of riches kind of comes to mind, it was very, very rich. I'll state very clearly, we added a lot of cost on the CapEx. We added a lot of cost on the OpEx, just to give ourselves more comfort and more cushion to make sure that these numbers, because it is a PEA, because it's an inferred resource, just to give us, as we move forward, the fact that we don't want to disappoint people with lower numbers going forward. One of the most, the strongest points that we had where we were confident in releasing that PEA was the fact that that we are drilling right now with 4 rigs on the property, and that we will come up with 1 million, and our target is 1.5 million ounces by March. And if we come up with the numbers by March, then our NPV of 76% or 432 million, that NPV of 432 million will probably increase by another $200 million. So that gave us a lot of comfort that as we move forward, things will only get better. But if you look at probably the most interesting fact that I see here is that, even with a very modest 800,000 ounces, we're looking at an all-in cost of under $500 per ounce. Now that puts us probably, in our presentation we say within the lowest 10%, but in actual fact, it's probably closer to the lowest 3% of any gold mining companies in the world, any gold producing asset in the world. And so the reality is that we've got a very, very high quality asset that we're in the very, very early stages of development. As I say, we've only done 18,000 meters of drilling at our lead deposit, which is called Cerrado. We're drilling there right now. Our target is to be at 1.5 million ounces by the end of March. And then we're looking to be at 2 to 2.5 million ounces by the end of September. So not only we're moving that very quickly as well, which is very important. So the proof will be in the pudding. You're going to be sitting here in a year's time saying, Mark, you told me we were, and we didn't get there. Or you're going to say, Mark, you got there. Congratulations. Yeah. And the reality is we strongly believe we're going to get there.
Okay, so just want to make sure people heard that. So the IRR is 76%. And I think you talked about all-in cost. I think all-in sustaining cost is under $500, right? Just want to make sure people got the numbers right there.
Yeah, no.
Cool. Okay. So you're advancing that one quite quickly. You are going to have to spend some of your $9 million on that. When you go to market, and you're talking about IPOing in December, obviously the exchange allowing, it's always fun and games, jumping through a few hoops there. You're going to be raising how much more money?
Well, we're looking right now. We're raising up to 20 million US, and we'll see how we go. I mean, the gold markets are very tough right now, as you're well aware. We've had 2 weeks of very, very poor markets, so we'll see how that goes. But the reality is that we've got enough money to drill the existing program we're drilling right now to get us to 1.5 million ounces, and so we're raising that money at $2 a share. Which is 100 Canadian, which is $140 million pre-money Canadian, or about 108 million US pre-money valuation.
Okay, and look, I don't want to spend, because I'm just conscious of time here, I don't want to spend too much more time on the asset. The assets, I think we'll put a link to the presentation in here as well. But I'm want to get into the capital market component. So you're listing pre-Christmas. Why not wait till January? I mean, typically the market picks up again in January. You may even see with Biden coming in, gold picks up again. Who knows?
That might, we may go that way. What we were hoping is that we were going to catch the tail end of the wave, and we've been advised by our consortium of bankers to try to get it off. And so again, what's interesting is that we've got sufficient capital. This is really more of an opportunistic opportunity to come in and raise more capital. But again, we've kind of come into a market with strong headwinds. So as a consequence, we may wait. I mean, that may be a consideration.
You know what bankers are like. They want their fees this side of Christmas. Helps with a bonus. Okay, well, I'm sure we'll wait and see what happens there. I'm just trying to think, for 2021, you're listing on TSXV, I suspect. Is that right?
Yeah.
Right. Okay. And were you tempted to list anywhere else instead? Or was it just nice and cheap up there?
No, I mean, we know this exchange. It works, and so we're right now. I mean, we want to. Our focus is not to be focused on as the listing process is a very complex and arduous process, and so the reality is, let's make it as simple as possible for ourselves, and let's deploy our efforts in driving the assets. That's the element we have here.
And what are you hoping to list at?
Well, again, we're targeting $2 Canadian as our offer price, and so that's where we're pretty comfortable that we should be able to raise it.
What's that put you at? I'm not quite sure how many shares.
About 110 million US, or about 140 million Canadian pre-money.
Okay, interesting. Okay, and given your track record, are you seeing any institutional interest?
We are. We have institutional interest, and we already have probably 5 or 6 investors of institutional investors currently. But we're looking to add to that equation. Okay,
all out of North America.
No, I mean European, American, and Canadian. The Canadian, the Canadian investor base for gold, for gold funds is no longer as big as it used to be. The Europeans and the Americans have a far bigger slice of that pie right now. Mm-hmm.
Okay, so anyone listening to this story, like on the Crux Investor Club or elsewhere, where should they be looking if they want to take a piece of this?
Well, I mean, I think in terms of obviously we'll be listing in the near term, but we have a consortium of Stifel GMP, Cormark, Haywood, Canaccord Genuity, Red Cloud, HC Wainwright. So we have a good consortium of bankers behind us.
Why so many?
Because we're looking for growth, and we're looking for them to help us in our growth, and they've helped us in our past, and so we've worked well together. So we tend to be relationship driven, and if things work in the past, continue the formula going forward.
Okay, so anyone interested, contact one of the above. See how it goes. Okay, well, look, Mark, appreciate you coming to us and letting us hear that story, and stay in touch and let us know how things progress. We'd love to take that phone call.
Wonderful. Thank you, Matthew, very much for your time. I really appreciate it.